Now, while the price of oil has recovered to a 3-month high, the risk for the crude market, well, it still very much exists. Fatih Birol, IEA Executive Director, told Bloomberg what drives the market and where he sees the biggest challenges.
A gradual recovery of the oil markets for 3 reasons. One, demand is slightly better than in the previous months. Number one, demand recovery. Number two, OPEC plus agreement, perhaps not full, but a large extent compliance with it. Number three, not much talked about, but very important, a steep decline in US, Canada, and other countries where the markets are run by the private companies, the oil companies. So gradual recovery, if we don't see demand recovery continues, if we do not see OPEC plus agreement is not fully complied or not extended for some time, this may well be a cold shower on the current gradual recovery of oil markets. So it is the reason I wouldn't say do this, do that, but the current 3 factors need to continue in the next weeks, months to come if one wants to see a recovery of global oil markets.
OPEC. Going into this meeting, it seems like Saudi Arabia and Russia are actually on the same side, and they really want to clamp down on the cheaters, most notably Iraq, as well as Nigeria, Kazakhstan. But for a country like Iraq, that is going to be very hard in terms of these production cuts. Is it possible for countries like Iraq and Nigeria to really start to cut production and not cheat?
Now, I cannot again say they should do this or that, but not all producers are in the same category. Some of the producers have much stronger reserves and a political stability, while others are politically and economically much more fragile. And some of them were hit by the pandemic more than the others. You mentioned Iraq. Iraq has a new government, a very promising government, and I hope that they will deal with the problems they have in front of us under very difficult conditions. One of them is, just to give you a number, Annmarie, the 80% of the Iraq's budget, government budget, comes from the oil revenues. And with the current price levels, they are only able to pay the half of the salaries of the government employees. Leave aside the money for the health services, money for education, and others. So therefore, those countries, Iraq, Nigeria, Angola, Algeria, I should say, Algeria is hit twice. One, because of the low oil prices. Second, bulk of the Algerian gas contracts are indexed to oil prices. They are also affected from that. So different countries with different challenges in front of them, and Iraq, Nigeria are definitely at the top of that rather more vulnerable oil-producing countries category.